Hello, Namaskar. Welcome to Gandhian Voice. Today, I would like to throw some light on the industrial policy of Modi government. I have been observing Sri Narendra Modi ever since he became our beloved Prime Minister. During the election campaign in 2013-14, Sri Modi raised great expectations of an economic revival, a high rate of growth, and tens and millions of new jobs for the ever-growing workforce and population of India. The great offers like the Gujarat model, a corruption-free administration, Make in India, etc., filled hope in the minds of the common man and the youth of India. This new hope and the consistent failure of the Congress-led coalition governments to deliver a successful economy for India made the general public to support Sri Modi as a good alternative for developing India. A significant effort of Sri Modi for industrial development and employment generation was the program called Make in India. Of course, there are also some startup mission programs. In essence, the Make in India envisages inviting foreign multinational companies to invest in India and make goods for the global markets. The great expectation of this plan was Make in India will generate significant employment opportunities as well as generate substantial income for the government exchequer through GST and income tax. Somehow, Make in India did not live up to the expectations. Major irritants to the foreign investors were the rigid Indian labor laws, lower per capita productivity, etc., compared to China, the pre-COVID global destination for multinational companies. The high rate of corporate tax compared to developed countries is yet another issue. No one in India tried to address these industry hostile situations, and so the global tours by Sri Modi and his team for Make in India remains a wild dream. The banking crisis due to huge non-performing assets and the hangover of demonetization was another issue hampering progress of the Indian industry. In this situation, it is worthwhile to point out that the Indian industry can come up only by introducing a Made in India policy rather than the foreign companies come and Make in India policy. Make in India, if successful, can only lead to more tax returns for the government. In the modern context of mechanization and robotization, generation of employment opportunities by Make in India policy will be insignificant. On the other hand, if the taxes and rules for domestic investors are relaxed and better relaxation for exporting units, the country can expect more and more domestic entrepreneurs, better employment opportunities, and a surge in national productivity. The licensing procedure shall also change to apply and produce rather than the present get license and then produce. More relaxations and incentives can be given for each employment generated. The labor laws shall also be suitably modified to prevent exploitation by both management as well as by workers. It is understood that the public sector banks are flooded with deposits, but still loans for prospective entrepreneurs are a mirage. As the central government is pledging for collateral-free industrial loans up to Rs 2 crores, loans for tiny and micro enterprises shall not be 51-minute only on website, but it should be a reality. A way out will be to fix a target for each branch manager of the public sector banks for releasing a certain number of loans to new micro and small enterprises. As an example, a target to finance minimum 100 units per year can be given to each manager of the nationalized bank branch. More enterprises and more employment opportunities in turn will increase the tax turnover for the central and state governments. Only such a Made in India policy can promote industrialization, employment generation, and national development. Government enforced overheads shall be minimum for our units to compete in the global market. Only by global marketing and global competition, any unit can grow to multinational level. This approach is essential to overcome the traps of opening our markets as per WTO agreement. The more the global marketing companies in a country, the better is the economic condition of that country. In short, the industrial policy shall be to promote high turnover and lower rate of tax. Ultimately, that will lead to more tax money. The Indian planners leading the finance and industrial development must advise Sri Modi in these lines if they really plan a developed India. Thank you.